following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by OptionsXpress. Don't spend time worrying about your broker. At OptionsXpress, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. OptionsXpress lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. OptionsXpress is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are once again faring well and surviving these, I think tumultuous is an understatement, but tumultuous markets that we are currently living through. My name is Mark Longo from the optionsinsider.com, as well as many of the programs here on the Options Insider Radio Network. And I am joined by the usual cavalcade of cohorts plus one today. So we'll start off with you, the newcomer, the guest has pride of place today. He is Andrew Giovinazzi from Aqumin, and longtime listeners may remember him from his appearance many months ago, but he is back now and he's going to take a full host seat today. So Andrew, welcome to the program.
Thank you. I'm going to fill Mark's gigantic boots today. At Aqumin, I help basically product and business development for option-related software. And in my former life, I was a floor trader on the CBOE and PCX for 16 years. And right now, also, I do a little bit of moonlighting as well for the Streets Option Profits, help some of the subscribers try not to walk off a cliff when they have problems. And I'm a contributor there, a frequent contributor there as well.
And you can also see some of Andrew's stuff from his blog up on the Options Insider on a regular basis as well, where we highlight some of the stuff you guys detail with your software there, your Aqumin software. And Andrew, I'm not sure if Mark informed you, but if you're going to take his place today, that means you have a certain quota of uncomfortable analogies and bad 80s references that you have to make today.
I was alive in the 80s, so I think I could help there with Mark.
All right, and the more grotesque your analogies, the better, because that's how Mr. Sebastian likes to roll. And
yes, he had a good one. He had an interesting one yesterday with the guy in the bar on Monday with the guy in the bar trying to sell you gold.
Yeah, something along those lines. And that voice we heard, listeners, is also the man from the mountains, good old Uncle Mike Tusaw. He is celebrating indeed today. It's a good day in the Tusaw household today.
It's a good day every day in the Tusaw household. Got good health, good kids, good wife, new kid on the way. What more could a man ask for?
It's days like today when you see 400-plus point down days in the market, and you kind of shrug it off and say, there are more important things in life.
Well, it's one where we always tell people, Mama said there'll be days like this. No one, sometimes people don't believe us, but days like today, they believe us. And so it's not happy from one sense in that people are ultimately losing money in some way in their portfolios, but it's kind of gratifying in that we do tell people, see, I told you this could happen. So it's kind of a mixed emotion kind of day for us.
I don't think Mama said we could have so many days like this in such a short time span, but
then your mother left you ill prepared for the marketplace.
That's true. Mother. That's true. My mother did not prepare me for the vagaries of options trading. I shall have to hold her to task for that at the next family gathering, maybe over Thanksgiving. And speaking of family, my extended family is also on the show today. Good old John Grigas from optionsXpress, taking a break from the trading desk. How are you there, cousin 5 times removed or whatever the heck you are?
Twice removed, but it's nice to get off the desk. I needed a break.
By marriage, I should say. By marriage, there is no blood between me and John.
Yeah, that would be an uptick for you. But these markets, I remember a week and a half ago, when we were doing this every day, and I was like, oh, I'm kind of bummed I'm missing out on the podcast because these are the fun days to talk about the markets, what we think is going to happen, how we got run over. And the market was nice enough to do it again. I mean, I wake up usually, get ready, get on the train. The first thing I checked, where the future's at. And before I even get there, because OX has a mobile site, and so you can check all the futures markets. I'm already hearing that the overseas markets are down 2, 3, 4, 5%. I'm like, oh, here we go again. That's when I stop and eat a big breakfast because I know next time I'll be eating will be at dinner time.
Our phone was ringing off the hook today, like it usually does on days like this, from media looking for comments and quotes about various things, usually the VIX. Everyone loves to eat up the VIX. And I always joke with them that I tend to lean bearish these days, even more so than I normally do, just because days like this are so good for business in terms of just not just volume, but for us, for radio fodder and website fodder. These are the days that are good for us. I tend to lean bearish regardless now because it's just good for business. And of course, Mr. Grigas, I'm sure it keeps you guys quite busy over there as well.
Extremely busy. And so to address some of those concerns, because our wait time and our call volume has drastically, when they say, hey, the VIX up 20%, figure we're taking about that much more phone calls a day, and the wait time goes up about that much. So I have 3 new brokers starting on Monday. So that's about how busy we are.
Good to hear it. And I'd imagine you're getting some extra business from, let's just say, some of the untimely problems going on at one of your competitors right now. Unfortunate timing for them, I must say.
Yeah, like I would analogy, I'd say like the floodgates have opened. In one day, I had 5 calls from somebody leaving this competing brokerage firm, and of course, some of them were retail clients, but a lot of them were portfolio margin accounts, which are minimum $100,000 accounts.
Those are sizable accounts, yeah.
Sizable accounts, active traders, active options traders, smart traders, premium sellers, guys that manage their positions that are rolling 100, 200 contracts, out of the money, like on a sell-off today, they'd be rolling down their spreads and rolling their call spreads down. And, we're greeting them with open arms. You know what I mean? Portfolio margin is not going to go away with the acquisition by Schwab. We'll look to expand it and promote it more.
Yeah, I can't imagine having a day like today and not being able to log into your accounts. That's just mind-boggling to me.
No, I mean, yeah, that was another one of our competitors. I don't want to name names, but I know one of our competitors was completely down for the day, and their solution was, let people trade free for the next day, and it's pretty much what the value of their service is, zero.
Well, what do you do about the day when you can't access your account though? Don't you get a credit or something like that?
Yeah.
No, they didn't. I mean, they would probably go, people would have done I've heard this before. Oh, I would have sold the high and bought the low and got back in and reversed and been the best trader of the day if only I could have accessed.
Credit me at selling the top, buying the bottom.
So you can never really, take the retail or the client's word on where they would have got in and out. But yeah, that's what I mean. From what I've read, there's a lot of stuff out there. If you just Google it, they let them trade free, and that's kind of what we equate their service to.
All right. Well, with those comments, leave them where they may be, because it is interesting nonetheless to see all these problems occurring at such untimely times for these competitors. But with that said, we are going to roll right into the trading block.
The trading block.
All right, and welcome to the trading block. This is indeed the portion of the show where we discuss, surprise, surprise, what is trading, what is moving the markets today. And in case you were asleep or under a rock for most of the day, it was a somewhat interesting market, I suppose you can call it. Then we have another one of these yo-yo market days. The S&P closed down 53 handles to 1140. The Dow closed down 419 to 10990, below Tusaw's favorite 11,000 level. The Nasdaq closed down 131 to 2380.43, and the good old VIX cash up 35% or 11 points to 42.67. Yeah, the market's becoming a little bit of a drama queen. It's the best of times, it's the worst of times. There are very few middling moves anymore. Everything has to be earth-shaking to the downside or all is bliss, all is right with the world to the upside. There's very little middle ground, it seems, these days. Would you agree?
Buy the hump, sell the dump, don't diddle in the middle. That's what I always say if I were to day trade, which I don't. But yeah, I agree with you, Mark. It definitely went down a lot. But one thing I was noticing throughout the day today was the 11:30 mark on the S&P Mini. John, were you seeing that at all? I mean, we bounced off of it earlier in the day, and then towards the end of the day, it looks like we formed kind of an, I'm just looking at a chart right now, it looks like we formed kind of an intraday double bottom, and then we rallied about 15 points into the close. I mean, were you noticing that all day, John, or were you just basically yelling at people to get back to their desk and take phone calls?
No. Yeah, I mean, I watched a lot of markets today, mostly futures. But the E-mini S&P, obviously, front and center, along with crude and gold. I mean, we're still way off our bottom. I mean, what was it? What was our low on the 9th? Was that the 1080 area? 1078, I think. So that's 50 points. But yeah, I watched it continue to bounce, and then that rally into the close. I was working with a customer right before I ran into the room, and we were trying to roll out some of his put spreads, and then we're like, what just happened? Because the market just disappeared on the bid. And look at the S&Ps, and they rallied like 12 to 15 handles. You know me, I'm a perpetual seller, except for when we sell off 250 points.
Except on the down days, and suddenly you find religion and you're a bull all of a sudden.
I'm a terrible trader as of late. What I am good is kicking people's butts in lunch bets. So I have that the August low will hold through the end of the month. So what do we got? Two more weeks. So I think that low I think the S&P low will hold. I don't think we'll even we'll break that 1078 level.
So you're selling puts or just trying to make lunch bets?
If I put real money on it, I'll lose $500-600. If I bet $10 on it, I'll make money.
Gotcha. There you go.
So my question is, why does this feel so different? We really haven't gotten any real news, but all of a sudden, no real news moves the market 4%.
You think today feels different than it did a week ago when we did pretty much the exact same thing?
But I mean, I talk about, let's say, just prior to the debt downgrade and things like that. So you get this kind of news, but it really isn't any worse than bad economic news we've been getting before. Now all of a sudden the market moves 4%. Doesn't it? My question is what's happened and what's changed? I can't even go back to the 80s because I don't remember in the 80s it just went down basically one day, Other than that, it pretty much went straight up the whole time.
Yeah, it seems like our frame of reference has changed over the past few weeks. And obviously, the volatility environment has changed. We're pricing in much larger moves, and we seem to be looking to fulfill those. It's self-fulfilling prophecy. If the VIX goes up, the market must vacillate at least 50 handles on any given day. It's funny, a few weeks ago, like you mentioned, there seemed to be consensus, at least going into the debt deal. Everyone and their mother wanted to get short VIX, wanted to get short VXX. They were thinking whatever, I think the level we were at was around 25 at the time going into the debt deal. That was going to come off fairly hard. There were a lot of people betting sizable amounts of VIX downside. Of course, we saw the exact opposite unfold in the days and weeks since then. And since those people have been rolled out or blown out, I haven't seen much consensus emerging since then. And anything along the, VIX, except for the fact that, you look at the futures and you look at some of the option pricing in VIX, and you'll see that the sensible people are pricing in a longer term revert to the mean in VIX, 3 odd months from now. But no one in their right mind is getting in the way of the train in the near term. They're pricing. If you're trading VIX now, you have to at least hedge for some upside explosion or do something. You can't just come in loading up on VXX downside like people were doing a few weeks ago and expect that to pay off for you right now.
The VIX futures are what, in the low 30s to high 20s? I mean, but what Andrew's saying, I think, is that what was the news that moved us today, other than the other overseas markets selling off? I mean, the core inflation was in line to slightly higher. Claims were slightly higher. I mean, it doesn't seem like, a lot of news articles, what the news are publishing right now is that's these high frequency tradings again. It seems like that's the easy explanation for people to throw out there when we get these type of moves.
That's the white whale everybody goes to. About 4 of our calls today were about what are high frequency people doing with this. It's sexy, it's fun to say, and it's the kind of thing people throw up against the wall when they don't have a better explanation. Oh, it's the high freak guys,
So I'll do the mark and go back. So do we blame them like commies for all our ills? Do we go, it's the high frequency guys now? They're like a bunch of commies raiding our market. They're blowing us all out.
It was the unions a month ago, right? They're the cause of this. Let's get the unions, and that. Yeah, it's an easy target. But I mean, I don't see any real reason why we're down 4% or why we're having these swings.
Yeah, I mean, consumer confidence, people will label on that, but is anyone really surprised that consumer confidence is low given what we've been seeing over the past few weeks? That's enough to scare the pants off anybody. So I can't imagine that's the main driver. We obviously saw some issues overseas in Europe, I kind of agree. I don't think anything is really living up to this sort of sell-off. And yet, we didn't see the traditional, what you'd expect of a midday resurgence, and that we saw a bit of that, but then it kind of sold off pretty hard again towards the end of the day. Then right at the end of the day, like you guys were saying, we saw a bit of a comeback. I'm not sure if that signals that the point of people were finally broken and it was a capitulation, or if they were just scooping up some bargains here. I mean, we've talked in the past, people are definitely starting to throw out the baby with the bathwater in some of these names, names that should be doing well on a day like today, like CBOE, for example. This is the banner day for them, I'm sure, and yet they're down 4% with the rest of the market. These names, some of these things don't make much sense. Uncle Mike, your one big equity holding, Apple, getting smoked to the downside. Is this really? Are we really seeing a changing environment for? I mean, the whole year the economy has been in the dumps, and people they can't sell iPads fast enough. Are we really seeing a changing environment for them going forward?
No, I mean, what's going to be interesting about Apple is that this may be, if we come down a little bit more, this may be another buying opportunity for Apple. I mean, we're going into the fall season. People are going to want to buy iPads for Christmas, and I'm actually becoming a little bit more bullish on Apple right now. I mean, we have our puts in place like always. I'm not taking away protection.
320 put, baby. 320 put. You got it.
220 put. That's how we're doing. But no, it's actually the 370 put. Thank God. But with it in mind, I'm in agreement with you guys. There's not a lot of reason for us to be down this much that we know of right now. So, I mean, maybe something's going on over in Europe that we don't know of yet, and it's definitely not boring. That's for sure.
Right. It's like the funky shoe drop market. Right after we all expected volatility to come in right after the debt announcement with Congress, but it never did. I mean, it never even got really close to fading. It actually stayed bid the whole couple days until the downgrade. And then I guess that was the event, right?
Yeah, that was the event to the upside. Yeah, everyone was positioning, 23 and below probably in VIX and VXX, and it just never materialized. I joked with someone that was kind of analogous to me of, when I hear everyone suggesting the same trade to me, you got to get short VIX here, I get a little nervous. It reminds me back when everyone and their mother told me to short Enron 20 puts. Oh, it's printing money. It's like IBM. They're not going away. I heard, how many people did I hear telling me how great that trade was? And then when I heard all those people buying into VIX downside, I kind of had the same flashbacks. Now, Andrew, you guys over there, your Aqumin software, a lot of what you do is you highlight and you pinpoint particular names that are looking pretty active and unusual today. And obviously, there's a lot of the normal names popping up on a day like today with the metals, and we'll get to all those in a minute, Uncle Mike. But anything that you saw on your software today that surprised you, that was maybe a unique name or a unique outlier that you weren't expecting?
Well, the only thing really that surprised me actually was the metals, right? Because I'm still surprised that volatility kind of, especially in like silver and things like that, AGQ, it's still kind of contracting. I don't understand why that volatility is still not bid. It's sort of like everybody's worried about everything else. So these names actually, when pretty much all the volatility in every other ETF is up, it's still, that stuff is still kind of coming in, and I'm a little surprised by that. So that, as far as a standout.
You think the upside skew should be steeper in these names?
I just don't think, besides upside, just pure at the money, because I guess the short answer is they just keep going up. And usually what happens, me as an old premium buyer, I love when these names would go up, volatility would come in, and then that's when you actually have an opportunity to backspread. So people are looking all over the market. I really don't care what silver or gold's going to do, but if they're going to keep driving the volatility down relative to everything else exploding, it just looks like more of an outlier to me. But that's my observation today.
It's funny, you may be the only guy come on the show who is an old school CBOE hand who's actually an old school premium buyer. I think all of us former CBOE guys seem to fall into the degenerate premium selling camp for the most part.
You know what? I learned by trading biotechs, and everybody said, 100 volatility, you sell it. And then I watched it go to 150, 200, 250, and then, and I learned my lessons the hard way at a very early time. So whenever I see vol come in, when I see everything else exploding all around me, and actually I have several names where I see some volatility coming in a little bit, that always makes me want to look. I just can't help but gravitate. I'm kind of like the moth to the flame, and I gravitate to the cheap vol when everything's exploding.
That's an interesting perspective. Like I said, we don't have, I know most of the old school CBOE guys were when in doubt, palms out, and pretty much when everything else happens, palms out. So it's refreshing to hear a different perspective. But yeah, since we are talking about,
I thought he was going to say, sell it. I just assumed that's what's going to be his next word. And then so yeah, it is nice to hear somebody say. I heard I worked on the floor there. I didn't make markets. I made them off the floor. But the old school guys would always talk about buying premium, and then they would make out like bandits, like in 2008.
Exactly. You spent a lot of time in a lot of pain not making any money, and then all of a sudden you had probably 3 days a month where you actually made some money and it was all worth it. I mean, don't get me wrong, I don't mind selling it either, but I still have a hard time on getting a good signal to really sell anything right now. Because, really, as we sit here, there's 4 people that are fairly engaged in the market, and we don't know why the market's down 4%. Usually you can come up with an excuse. And right now I don't have any excuses. I'm looking for the shoe. Where's the shoe? Where's the shoe going to drop? Is it going to be the Europeans? So again, that's just when I don't understand something, I tend to just buy the juice and not sell it. That's just that's my knee jerk.
Probably why you've been around for a while in the business. But this reminds me of when I first walked on the floor and I was, bright-eyed and bushy-tailed, and I'd ask the old-timers, why are we down 10 handles today? And they look at me and say, more sellers than buyers, kid, And a day like today, I think that's pretty much the answer. More sellers than buyers today. And not much, if you start digging into the tea leaves too much, you can kind of lose yourself. But since you did mention the metals, let's dive into our commodity rundown there. I'm sure, Uncle Mike, you're chomping at the bit to lord your long metals over all of us.
Well, it's nice when you have something in there that's going right, huh? No.
Hey, careful! I can bring up Cisco, sir. I'm not afraid to use it.
I know. We had a Sebastian and I's rant with each other on Monday. It was kind of interesting, but nonetheless, it's the sun shines under a dog's nose now and then, right? But anyway, yeah, with gold today, it's just gold is the fear place right now. When everyone is scared, that's the latest place that's safe right now. It's gold, and then treasuries. Even though treasuries pay next to nothing, gold and treasuries are where everyone is putting the money to. Money has to go somewhere, and right now that's where it's going. And I think a lot of it has to do just with all the utter fear that's going on. I mean, this is insanity when we're down this much. So I think it's fear-based as of right now, and we're rolling up the puts, and hands are still in the air. And I'm not gonna fight it when a major commodity like gold continues to make new highs.
Don't step in front of the train. Just jump on it and enjoy the ride.
Yes, and wear your seatbelt.
Mr. Grigas, what other? You said Mr. Navabi is slinging size in cotton today.
Now he's buying a cotton ETF. He doesn't really mess with the futures. But if we could jump back to that 10-year note, I know that when we had our live show, the gentleman from Tasty Trade was talking about how the bonds were never going to go higher. And if anybody wants to take a look at the July 21st chart to where we are now, I think we're 6 handles higher. I think it's important to remember those futures markets can continue to go higher and have less and less effect on the yield, because the yield is not going to go to zero. But I mean, Tusaw's right. They're jumping into a 10-year yield of. Did anybody see it? I think somebody said 2%, but I can't imagine it was that low today. Anybody know what the yield was of the 10-year?
It was somewhere around that level. It was insane. And you have to, at a certain point, what is security? Is that security for you, picking up bonds at these price levels with those yields? That's a flight to quote unquote quality. I think I could choose a lot more quality than diving into those.
Yeah, dividend-paying blue chip stocks. I mean, we were doing, when we made the sell-off on the 9th and 10th, we were putting people into T-bills because they were rushing to get out of their equities, get me into cash, put me into something that's safe. What's your safest thing? Treasuries. What's your shortest term? 3-month and 6-month T-bills. And they were paying a negative yield. They were paying over par, and T-bills are sold at a discount. They were paying over par for something that was going to cost them money just to park their money in there for safety. It was like 2008 all over again, but I didn't even see the need for it. We weren't even as bad, but I know people will pay for safety, sometimes regardless of any price.
In the meantime, I know we had a lot of activity today in Ford bonds. Looks like there are people picking up their 7% coupons. Were really were lighting up the tape today as Ford taking another big hit today. Uncle Mike, you guys still active in and around Ford? Are you taking up some puts to the downside here? Maybe the 5 level or so, knowing you?
No, still staying in it for right now. It's one where it's a smaller holdings. So, I mean, this is one where we're weathering the storm and we're playing the buy and hold game. And it's one where I just got to be careful with it. And the way with which we're managing risk is by the size of the position. And this is a stock that if we do come back, we believe that this stock will come back at a much faster rate than the market will. So we believe it's worth holding for a smaller position.
Yeah, you got a nice double bottom there on that on the chart. Looking at that June of 2010, the low was 975, and it looks like we hit that a couple days ago, right?
Yeah, we're getting down there again, down to those really post disaster days.
Well, I think that was like $1 when we were at it's in March of.
Yeah, not the ultimate disaster, but shortly after the worst was over, disaster.
Everybody talks about Ford around here. $1, I could have bought it for $1, and it went up to 18. But I mean, it does look like it was a head, shoulders, or double bottom here. So maybe you could. We had a lot of retail people buying calls in Ford today. I'm not sure why, but I kind of agree with you. So I think you could see a bounce here.
Yeah, some of the savvier people I think are starting to realize that we're really we're hitting some names just across the board, regardless of quality or merit, and starting to scoop up some upside. We can mention some of that in the old odd block, but of course, I think the only other names that are really driving a lot of call activity these days are some of these tech names, given all the patent madness that's going on. We saw Google gobbling up MMI, and so everyone's looking for the next one of those. Nokia's been up. Kodak, which is a perennial dog we've talked about on this show in the past. I mean, that stock has just been on tear lately and paying ridiculous yields to covered call writers and to put sellers. You could have sold the SEP $2 puts for 50 cents a week and a half ago on these things. It's a $2 stock, for God's sakes. I mean, these yields out here and some of these names are just getting ridiculous, and people are starting to realize that. And of course, people are also, a name like Kodak, speculating wildly to the upside that this is going to be the next one to gobble up for its patents. All right, and that is going to do it for the old trading block. And now we're going to roll right into the odd block.
The odd block.
All right, and welcome to the odd block. This is indeed the portion of the show where we discuss the interesting and or the unusual options activity that is lighting up the old tape today. We're going to kick things off. We talked about some tech names in the trading block, so we'll kick things off with a tech name here. Good old Seagate Technology, ticker symbol STX. They closed today down about 10%, or 1.11 or $1.11 to $10.59. And this is the name that's been pounded quite a bit. They hit their 52-week low this morning, which is around 984. So this name has just seen some better days, definitely. And yet, in spite of that, one of the reasons we wanted to highlight this one is because one of the few sizable bullish plays we saw today in the sea of red, we saw just bulls swarming over Seagate, thinking that this downturn has been overdone in this name and gobbling up a ton of calls. Particularly, these are less out of the money than they were this morning. These are the DEES 11s. These are about 40 cents out of the money now. They picked up about 22,000 of these guys. Huge blocks coming in right in the morning, like 4,000 and 5,000 contracts each. So someone was chomping at the bit to get long here in Seagate. And this, like I said, this is the name that does about 14,000 contracts a day. They did 30,000 today. The bulk of that in these DEES 11s. They picked them up for prices averaging around $1.25. So this guy's obviously looking to pick up the stock in a range of about $12.25 if this thing does indeed pop to the upside. So yeah, in spite of the sea of red and in spite of Seagate being a relatively lackluster performer of late, we saw bulls out of the gate in this name this morning, gobbling up relatively out of the money calls, especially when these trades are going up. The stock was trading around 9 in the 9 handle somewhere. So these were substantially out of the money calls. Not surprisingly, the vol on these strikes has spiked about 12% on these names, and the most of the activity, like I said, the bulk of it was calls. So a sizable call to put ratio today. Any of you guys active or watching Seagate at all?
No, not here. A lot of people I see do jump in on the retail side will move into stocks, bottom feeders when they hit the 52-week low. Obviously not of this caliber of size.
Yeah, this is some size. This isn't your Joe 5 lot picking up, seeing a chart and calling up John to pick up a 5 lot of Seagate. This guy is lighting up 20,000 contracts on the opening print.
Yeah, I might have to peer into Tim Navabi's account and see what the heck's going on there.
That's Navabi size at that point. Yeah.
But yeah, I mean, I don't know much about the company, but I guess obviously somebody is very bullish on there. And what they got 120 days expiration. So, keep it on my radar, put it in my watch list.
Yeah, he's got a bit of a rally. He's got to go about 20% before these calls start making some money. So it's or at least they were when he was buying the calls and the stock was trading around the 9 handle. So an interesting trade to see so much opening bullish paper in the morning and then turning the other direction now to a business model that is slowly going the way of the dodo. Good old New York Times, ticker symbol NYT. They closed today at $6.88, down about 40 cents. This is the name that does a whopping 500 contracts a day. They did 13,000 today. And the bulk of that was in an enormous, particularly enormous for this name, they do 500 contracts a day. We saw an enormous multi-exchange sweep of the SEP 6 puts. They picked up about 10,000 of these over just a few minutes, trading anywhere between 20 and 25 cents. And, the knee-jerk reaction to this, to see this and be like, oh, this is an equity holder looking to hedge himself. But on the flip side, this guy, if it is an equity holder, he's really he's pretty late to the party. The stock has been crushed quite a bit, and hedging at the 6 handle at this point, I guess he's really concerned. Either he's a serious bear, which I'm kind of maybe leaning a little bit more towards or he's just really looking for some. I mean, it's only September too, so I'm leaning more towards the speculative end rather than a equity holder long a ton of stock and looking for some very near-term downside protection in New York Times. But yeah, 10,000 plus, a total of about nearly 11,000 of these puts went up on the day today. So a lot of bearish activity lighting up the tape in New York Times, even more so than we're seeing across the broad spectrum of the market. This guy needs the stock to drop about 20% for these puts to really start paying off. I don't know, you guys. I mean, obviously everyone's been pretty bearish on New York Times and the print model in general for quite a while, but still, this guy's playing it a little close, don't you think?
Yeah, I think this is definitely a spec play, because if this is a long-term shareholder, then he probably would have gone out a little bit further than just a few weeks. Unless maybe it is a shareholder.
Exactly. If this thing gaps down to 4 in the next couple of days, the next couple of sessions, and we'll know that something leaked, just like the S&P downgrade leaked, and just like the probably the Google MMI thing seemed to leak out a little bit ahead of time, and all sorts of fun things. No one can keep a secret these days. It's the moral of the story. And then we're going to close things out in your neck of the woods, Uncle Mike, the energy sector, with NRG Energy, ticker symbol NRG. No surprise there on the ticker symbol. They close. I hate when names have an acronym in their name and then ticker symbol is something else. Completely, that drives me crazy. At least NRG is following suit fairly nicely. This is the name that closed at $21.79, down about 2% or 47 cents on the day, and they do about 1,200 or so contracts a day. They did about 25,000 today. We saw a couple of interesting trades in this one today, indicating some different perspectives on this name. The first ones we saw were some people betting relatively substantially that NRG was going to remain pretty range-bound for the near term. We saw people lighting up the tape on these SEP 23 calls, selling, about 4,700 went up just in the opening part of the session, and a total of 6,000 on the day. This is on a previous open interest of just about 800 contracts. So this is all opening paper, and the bulk of them were sold at around 50 cents or so. So these guys are obviously either equity holders who are looking to eke out some extra premium, or people who are just thinking this name has gotten beaten down and it's going to stay down here for the foreseeable future. We also saw some miners selling on the SEP 24 strike as well. Talking about the range-bound nature of this paper, because we also saw about relatively, where is it here? We saw on the SEP 20 strike, we saw a lot of people coming in selling the SEP 20 puts as well, in prices ranging from 35 to 50 cents, along with a mixed smattering of buyers, but the bulk of that activity seemed to be leaning towards the selling side. So we're seeing people betting on NRG hovering in the 20 to 25 range. But not to be outdone, one sizable player is betting on a substantial upside pop in NRG. He came in and sold the, or did it for a flat fee, so you can say sold, bought, whatever you like. He sold or bought the D1825 risk reversal, bought that 5,000 times for even money. He sold the D18 put for 70 cents, and he bought the D25 call for 70 cents. So he did it for a net even money, obviously thinking that this name has some substantial upside by December expiration, not afraid to pick up the stock at the 18 handle if things do go against him. And so I like this trade. It's a little more nuanced. We've discussed using risk reversals to put on a reduced premium bullish positions in the past. This guy obviously heeding our advice on this one. I'm not sure if I like the name he's doing it in. Uncle Mike, you're pretty active in the energy sector. Are you at all bullish here on NRG?
Don't follow this one per se. I mean, it's on the list, but it's not one of the favorites, so to speak. But I do like this style of trade. The reason that I'm a big fan of these combinations or the risk reversals is just the fact that you have so much flexibility with these. If it goes up one day, you can buy to close the put, and then you're taking risk off the table, and then you can turn it into a free bull call spread. You can play with the different months. There's just so many things that this can lead into for managing risk. And the fact that he sold the 18 put, he has a little bit of leeway on this. So I like it. I love the strategy.
Also, with volatility where it is, that this is actually probably one of the better times for risk reversal. The skew's exploding in all these names, and you don't get these chances very often to pick up, that kind of risk reversal with that spread for no money. Usually, you might have to pay a little bit because you're not getting as much for your put sale. But now you actually get you're getting pretty huge premium, even in a utility.
Yeah, risk reversals are inherently skew trades, and so a name like this, you're right, being able to put something on for such even money, he's obviously taking advantage of these downside premiums we're getting to really to put on a decent bullish spread for no outlay. And you're right, Uncle Mike, these trades are an adjuster's dream because they require so much handling and adjustment. People just come in and put them on and hope the stock rallies. You're missing 90% of the ball game with these trades. There is a lot of adjustment to do, and you can really make these trades perform for you much, much better if you really just take a few minutes to adjust it between now and expiration, as opposed to just taking the old expiration graph approach of I put it on, if it rallies, it works out kind of thing.
Might as well just buy the stock.
At that point, yeah. So I think this guy, hopefully, it seems like he falls into the quote-unquote smart or nuanced money category. So we'll have to see how NRG performs into December. We'll put it on our watch list as well, along with a few of these others in the name, and then we could jump out from there. But that is going to do it for the old odd block, and now we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by OptionsXpress. OptionsXpress lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, OptionsXpress is the online broker for all traders. Best of all, OptionsXpress allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit OptionsXpress.com/OXRadio for your free account. OptionsXpress is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is indeed the portion of the show where we discuss what is going on behind the scenes in the world of OX, what customer activity is lighting up the tape, what kinds of questions they're receiving, and all sorts of fun stuff. And I'd imagine today was, as you alluded to at the top of the show, was one of those outlier type of days. I know last time this happened last week, you guys couldn't even make it on the show. You were so just behind in the call queue. How are things looking today?
It kind of worries me sometimes when we have these type of moves and we don't see the immense amount of volume that we had last week. You're hoping that your client's capital hasn't been diminished too much.
Those margin calls leave a bit of a gap sometimes.
Yeah, but when we have these type of days, my boss will usually walk by and he goes, what are the customers saying? It's kind of like what we talk about in here. And, today, a lot of people, they weren't scared. I mean, I won't say that our retail investors are better than anybody else, but a lot of people weren't short puts, weren't panicking to roll out or roll down or cover a huge loss. A lot of people had bear call spreads on. A lot of people were long puts. It's almost like people thought that this this rise that we had over the last 5 days, there would be maybe a retracement or some type of test. So I had to tell them, I'm like, people they seem to be making money. There was no panic like what I felt like a week and a half ago.
Well, that's good to know. I mean, we always talk about the options demographic, the options trader, even the options retail being much more savvy than a typical stock guy, and they're more nuanced and they perform far better in these sorts of scenarios. So it's nice to see that is indeed playing out as we hoped.
Yeah, and you are right. I mean, the people that are just long buy and hold stocks, they were panicking because they were, this isn't good for anybody's heart when the market drops 4%, 4 times out of the last 10 days. On the other side, my disputes do pick up a lot when we get this type of volatility. And one of the ones that I want to discuss, I can't name particulars, but in both of you, since both floor traders, market makers, locals, you can attest to the fact that, not this day and age, but before everything was worked in the pits, right? I mean, before they started crossing everything, and before everything went up on the screens and they killed the edge, everything was executed in the pits. The CBOE having the proprietary products of the SPX and the XEO and OEX and maybe the DJX still does. I mean, the SPX pit is huge. I mean, there's still a lot of people down there making money, doing well, and making markets down there. At optionsXpress, because of the fact that the liquidity down there for like the XEO product is better than what you're going to see on the screen, a lot of our size orders or even size spreads will route to the floor for best execution. That's a plus, right? You're going to get tighter bid-ask spreads, better fills, more executions. And we had an instance where a customer was trying to get an out on an order, and we're like, "Oh, you're too late to cancel. You're already filled." And in this day and age, computers are such a great thing. They've narrowed the spreads for retail clients. I'm not talking about the market makers, but for retail clients, they've lowered costs. They've narrowed spreads. And one of the downsides is that everyone thinks that because it's electronic, there's still no manual oversight or that everything needs to be done in tenths of a second or instant. Well, a lot of people don't realize that a lot of our big orders that are CBOE proprietary products, we route to the floor and we work them down there. And if you guys want to jump in and explain, but when you're doing a 5,000 lot, a 10,000 lot spread, it takes a while to get that ticket right up and back into your box and back up to the broker dealer and the clearing firms and get down all the locals numbers and their clearing houses and, did 500, 500, 500, 500. And this customer just would not accept the fact that in this electronic day and age, when everything is done electronic, that we were still executing orders for his best interest in the pits. And
this guy's slinging 5,000 lots, and he still is unused to the floor execution. Wow.
Yeah, I don't think he's ever had a problem with an XEO or OEX or SPX execution, doing credit spreads, trying to cover one at a loss, and was trying to cancel it as this market was moving, 5-10 handles at a time, and just very quickly that you're not going to get an instant out as it's trying to go through, through your upper strike or through your limit price. These guys obviously get paid to fill orders on the floor, so they want to fill it, but they're also getting better prices and getting fills at times where the size may not get done on the screen.
As a former SPX local, I could just say some of these customers like this can be a bit of a hassle where they'll come in on a day like today when markets are going to be wider and things are moving around quite a bit, when the locals really have no handle on where things are, and they'll come and quote up some ridiculous three-way, and then they'll come in right in the middle, and they'll do nothing but waste everyone's time and piss everyone's off, and then they'll uptick a little bit on their bid or on their offer to try to play ball a little bit, but they want to essentially trade right where the market makers want to trade, and so those kinds of executions tend to be problematic. And I'm amazed to see it in this day and age that someone's doing that much size and is still befuddled by floor execution. Because you're right, these things take forever, and at least in the frame of reference we have today, and that's probably the one downside to the great technological advance of the last 5 or 10 years in the option space, that everyone is accustomed to millisecond executions, and when you have to wait for something as simple as a cancel, or an out, that can be a little nerve-wracking for people who aren't as used to this stuff.
Yeah, that's what's nice about working with like people who trade futures and futures options. They're so used to everything being executed on the floor, and the futures options pits were so slow to get to the screen, and the softs market, sugar's not one of them, but most of them are still executed on the floor as well as the meats. These people realize that the quotes are stale or they're old or they're not even worthy of looking at, and they understand we got to call the floor to get an out, and an out may take 20 minutes to a half hour in a fast market. as opposed to the equity options traders and index traders who are just used to these, immediate outs. Too late to cancel is like unheard of on the equity side of the business.
Yeah, it's as fast as a mouse click.
Yeah, it is. And but other than that, the Chinese markets, because this is expiration again, off the top of my head, there's two that are still halted. A lot of them, CCME and the other ones, have come back into trading and are no longer halted. But PUDA, which we have a lot of clients that are holding positions in, they got an email today, and UTA are still two Chinese stocks that are halted. So the OCC does remove them from automatic thresholds for automatic exercise. So if you are in a long put position and it's anywhere above $10, you may want to look into to calling us up or calling your broker dealer. It was funny. I know Schwab wasn't allowing people to exercise their puts, and we were. So your broker dealer may not, allow you to exercise it. But I think you have.
So do they actually have a closing? Do they actually give closing prices on those for those options?
No, they don't. We exercise and put people short stock, and we even do it like in an IRA, a cash account. It's a special exception from what we've discussed with our in-house attorneys and OCC that they have the right to exercise it even if they don't have the funds. So we'll put people short and hope to God that the thing doesn't gap up when it reopens. But I mean, I've actually seen people that are in bull put spreads, and they will go ahead and exercise their long one to cover their short put so they don't get screwed. The other broker dealer won't allow them to exercise it, and then they'll in a bear put spread where they're guaranteed to lose their max loss, they'll end up making thousands of dollars because they'll end up being short the stock. So
wow,
it could turn out in your favor.
I just when I was writing for Options Profits, that was a stock where we closed. I was basically recommending some rights when the volatility was higher earlier in the year on it. I closed the positions out, but one of the subscribers was still, he decided just to keep selling the puts. I mean, volatility got real low, couldn't recommend it anymore, but now he was stuck with basically his short put and didn't know where the stock was going to open. So it's something to get back, because I've never actually seen a stock. I've seen a lot of stocks go to $1, but I've never seen them just disappear off the map. It was the first time I actually saw anything like that in like 20 years.
Vanish into the ether, and you have no idea where you stand. That could be a little nerve-wracking, I could imagine. Of course, if you're trading those stocks, and especially if you're writing downside puts in them, I would hope you have some level of awareness that could indeed happen to you, and that is why you're getting these ridiculous premium levels for writing these puts.
Correct. Yeah, I mean, those phone calls, talking to the people, and they're like, well, what do I do? And that's literally the one where I don't even touch with a 10-foot pole. I'm like, I have no idea. I mean, you exercise, maybe you get screwed. You just don't know either way. It's really a hard call.
Well, thank you for that, John, and for those illuminating and also disturbing scenarios you painted for us. Once again, Mr. Grigas painting some interesting images. But yeah, that's good information, particularly on the reminder to call your broker if you have short positions in any of these stocks, because you're not going to get the automatic exercise that you may be used to when you're trading in and out of Apple and Ford and all these other names that we talk about on the show on a regular basis. All right, that's going to do it for the Xpress Block, and now we're going to roll right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the show where we discuss what's coming up for the next few sessions, what's on our horizons. And of course, as we discussed at the top of the show, we saw a bit of a reversal in the broad indices towards the end of the day. So perhaps that is heralding a sign of things to come tomorrow, that tomorrow will be a bullish day. Of course, we saw this on our last big down day last week, where the market closed down aggressively towards the end of the day, and people thought that was a sign for the very next session, and yet we opened up strong the very next morning. So it's hard to read the tea leaves on these end of day movements and make much sense of them. But yeah, and coming up into the coming sessions, obviously everyone fixated on what's going to happen in the near-term session, and quite frankly, what is going to be the key thing that sets off the market tomorrow, either to the upside or to the downside. We seem to be prone to this new frame of reference now where everything has to be a dramatic swing. There are very few middling, medium movement days these days, so everyone's looking for what is going to let up the tape for the next few sessions. Uncle Mike, what are you watching aside from letting your underlying fly high on the metals there?
Well, I mean, I think we're at a key point. 1130 on the S&P Mini. I'm watching that number. It's more of a numbers game right now. I think it's the fact that we don't have the macro news. Don't get me wrong, we don't have a ton of good news right now, but I think right now, just watching the key numbers with it to see where we go with it. That's probably the main thing that I'm watching right now.
And now, Mr. Grigas, what are you guys watching around the block there in OX land?
Well, I kind of want to figure out the markets as we were discussing earlier, like what is causing the movement. I think when Andrew pointed out Target and Walmart being up, I think those are your best tea leaves to see that people are just running into value stocks, safety, and are really scared from last week. Looking at the economic reports, there's really nothing coming out tomorrow. And I know you said, we either have 3% up days, 4% down days, but I think yesterday the markets were pretty much unchanged. I don't feel that a lot of people want to be...
That's the exception that proves the rule, sir.
I don't feel that anybody wants to be long going into the weekend. It seems like big governments, whether here or across the pond, like to, announce things on Sunday nights, which really ruined my Sunday afternoons. I'm checking email at like 5:00, and I'm talking to my boss at 5:30.
If you haven't learned of weekend risk over the past few weekends, then nothing will teach you. First the downgrade, then the MMI thing, lighting up the tape of all the tech stocks on the next Monday. I mean, if you haven't learned by now that there is literal weekend risk in these markets right now, then there is no hope for you.
Yeah. So I think people that were, hey, I might get out for the weekend, that we had a nice run up. I don't know what the percentage gain was from the bounce from the bottom, but it was a definite, if you're a swing trader, enough where you could take some profit. Maybe these people are saying, hey, I'll get out on Friday. They saw the sell-off coming. They perpetuated it by getting out of their longs, and the short sellers came in. So I'm just going to be reading the news and looking for anything silver lining here to get long. Talking about my own trading, because I'm going to be on vacation next couple of weeks. I bought gold puts at 1632 on like the last Friday of July, and if anybody has any reason or where a top is or resistance in gold, I'd love to hear it. I saw a headline on CNBC that gold is on its 1,000th day of a bull run. I just can't imagine that people can continue to buy that at these levels without any type of pullback.
Yeah, it's amazing. It's kind of like what we saw with silver recently. Of course, silver actually had the pullback. But how long have we been having this discussion in gold? It's like we were saying it over and over again. When gold was at 1,600 and 1,500. How much more upside can there be? And yet it just
fundamentally, I thought the fundamental run up was because of the debt ceiling, and that 4 to 5, 6 weeks up to that announcement was people just running in, and I thought it would sell off. And man, I've never been more wrong, except for the trade I did on Tuesday, which was buying Bank of America at $9.70. So in 4 days, I lost 30% on that trade. It's just terrible, terrible.
Don't even get me started on bad recent trades. We can go toe for toe with some good ones. But of course, mine were more the clerical error type than anything else. But I think Tucson was right on the money with these ones. You can't really get in the way of this irrational bull in the metal, so maybe you just pick up the underlying, you collar it, or you don't collar it, but you put the put on really tight, much tighter than you probably would normally, and so you have that really tight downside protection, and you let the irrational exuberance just carry you away. And and if you get caught to the downside, then I wouldn't be specking pure upside, I wouldn't be specking pure downside, and this was because it's so irrational at this point.
Yeah, I kind of did like a put stupid. I sold futures short and I bought puts. So I don't know what you would call that.
You double dipped.
I think that officially is a stupid when you do. Not that it was a stupid trade, but when you do the sell or the buy, or it's a Texas hedge actually.
Texas hedge.
Companies based in Houston. Texas hedge, I think actually is the more accurate term.
Yeah, I'm not sure if the Texans are fond of that moniker or not, but
they just do everything bigger. You sell one, I'll sell two. I'll sell mine bigger. That's basically the Texas hedge.
There you go.
The puts were so cheap. I was like, okay, let's give it a shot. But I took an 18% loss. That gold did have one violent move down where vol kind of spiked, and I got out literally at the low, so I was able to salvage 80%. So not too bad.
So you still have your dignity. That is a good thing. So right now, before we sign off, then what I want to know, just for my own sake, where are you positioning in the market right now? Are you bullish or bearish? So I'll know which side to take.
Andrew, if you don't listen to the show, he fades me left and right. So I'm bullish. I mean, I'm gonna go in there and buy. I just moved an IRA over, so I'm gonna go in there and buy some good stocks. I'm gonna look for like a 4% dividend and just buy and hold them.
Yeah, I've been starting to do that in some of my IRA and longer term stuff as well. Even writing some cash secured puts, like I told you, those ridiculous ones in EK that were paying 50 cents on a $2 stock for 1 month. I mean, things like that, and also some better names as well that you can put in, and just like I said, names that are getting crushed with the bathwater these days. There might be some good long term right opportunities in these where you write near term and you hold them for the long term. Andrew, what have you been watching, sir, around the block with your various software tools at your disposal?
I guess because you stole my metal thunder, because that really is the thing that stuck out the most. And since I am a little more old school, I'm directionless. I don't like a delta if I can avoid it. So what I rather just do is buy cheap calls and puts together and see what happens and kind of ride the decay out to the extent possible. So again, I'm looking for the metals. If they keep getting cheaper, that's something I want to get in again, because you don't have to have an opinion and you can still be right. So again, the old back spurter in me comes back for things like that. Like, as I said again a couple of weeks ago, when I saw the volatility not come in, I did raise a little cash that I would like to put back to work, buying just good old fashioned stocks that pay 4, 5, 6% dividends again. There's a bunch of them around. So as far as managing the IRA, I kind of am I'm not really a market timer, but I do a little management when I see things a little out of kilter. And I feel right now that we are pricing something to happen in Europe. Either it's some kind of TARP or some kind of outside thing where they're going to kind of throw their hands up a little bit. That's where I feel this piece of volatility has come from, because really it's the only thing that I can put my finger on that looks, that even makes sense, and in that case, it's still metals, and looking for cheap premium in metals. If they keep taking the volatility down, that's where I like to be.
Grigas, we were talking about Ford before, and you were saying the 2010 low was like 978 or something like that. Right now, the weekly AUG 10 puts are trading for about 25 cents. So you could leg right into that level right there. If you're looking at a long term, if you're a long term bull in Ford like Tucson and some others, and you want to put this in an IRA or whatever for a rainy day, that's not a bad level to think about getting in on some names like this. Of course, there could be some continued downside for Ford, but I don't think anyone's going to long term suffer from holding Ford in the 970 level.
Love writing puts to get into cash secured puts to get into stocks, especially stuff like Ford, McDonald's.
Yeah, good old McD's. I didn't see where do they close today. Maybe they're another good bellwether.
Down $1.89 today.
Oh, so they got hit. So people are going to curtail their nugget munching for the next few months.
Or maybe that's all they're going to be munching.
You think bad times people flock to the dollar menu, but again, throwing the baby out with the bathwater. But we've seen a lot of examples of that today. If we have another down day like this tomorrow, there's going to be definitely some it's going to be deal palooza in certain areas. All right, gentlemen, thank you for joining me on the show today. That is going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. And I want to thank all of my cohorts, my partners in crime, for coming on the show today. Starting with you, Uncle Mike Tusaw, what is coming up over at Know Your Options, Inc.?
We're going to talk about spread trading this Monday night. In a market like this, if you're concerned with paying too much for option premium, perhaps a spread might be something you may want to consider. Join us Monday night. Go to knowyouroptionsinc.com for more info.
All right. Thank you for that, sir. And Mr. Grigas, what is coming up in Options Express land? Any interesting webinars or seminars or events you want to make our listeners aware of?
Well, the big news over here is the shareholder vote on August 31st. That'll be the day we move into Schwab, and then we should be under Schwab management September 1st, which will be the 6th day of my vacation. So I will be on a beach in Florida. Hope everything works out here well for everyone. But on the event side, we did have that VIX one. I think it was coming up this week, I believe, or was it already, with Russell Rhodes? You guys had him on Monday?
Yeah, we had him on the last show, yes.
Yeah, I signed up for that webinar. But the live events, San Francisco, I believe was last week, and down the road we have one coming up on the 27th in Boston, which are our free live events. You could register on our website.
Great. And Andrew, you have anything interesting on the horizon or anything fun you want to make our listeners aware of? I hear you just added a nice Excel component to your Aqumin software.
We did. So basically, anybody that has a spreadsheet with data that they already look at, especially downloading, volatilities, intraday moves, whatever they look at, we can turn that actually into a live space. So you can now quote the whole market at the same time. So when people are looking at all that, they actually can now, instead of trying to just type in a name, which of course you can do, you can see what's moving in the whole market. And that's the thing I become very partial to, basically, is just watching, being able to see every stock move and then kind of make a play based on that before you start looking at some individual charts and things.
Now,
So
I know you and I have talked before about Aqumin, and Aqumin, when it was originally designed, was really aimed at the hardcore institutional guy, but you've been talking for a while about getting that retail component out. Obviously, a good core of our audience is that high-end retail active options trader. Obviously, you have the Excel component. Have you also rolled out the more the retail-friendly version, I suppose you could say, of Aqumin?
Well, we're getting to that. Well, we realize it's going to take a lot more. It's going to take a lot more adjusting. Making the front end a little more friendly, more like actually, like the optionsXpress front end for letting people interface. So once we get to that part, then we will be launching the retail version of it for sure. So that's definitely something I know we need. It will be happening. But right now we're figuring if you can use Excel, the way we have it set up, all you have to do is basically cut and paste data, lays it into in our space, and then people actually get to look at what's going on in the market. So,
those retail users, they're sticklers for good UI. Unlike the institutional guys, you can give them a paper ticket and they're happy. But the retail guys, they like good workflow based UI to really get some stuff done with. You don't have good UI for the retail, they just regardless of how good your tool is, they just won't flock.
Yes, and that I learned. Although we did have we had a pretty successful demo period when we had some data that we were actually providing through the product, and a lot of people liked it, but it did require, a substantial amount of education on our part. So we have to go back basically to the drawing board a little bit. But as it stands right now with the Excel piece, it's actually very easy to use.
Well, I'm glad to hear it, and thank you for joining us on the show today.
My pleasure.
And of course, the Seabass couldn't be here, but I'll give him a plug anyway. Listeners should go surf on over to optionpit.com to check out all the latest classes and courses that they have available there, as well as some of his events and, of course, his blog, which you can also find on the optionsinsider.com, along with Andrew's stuff. We are indeed the clearinghouse for good options content these days. But that is going to do it for the show. I want to thank all of our listeners out there for downloading and streaming and subscribing to the program and making it such a success and compelling us and our new feed even all the way up to the top of the charts there in iTunes. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.